Welcome to the Gamma Brief. I'm your host, Alex. If you're new here, the Gamma Brief is an experiment. I'm using a layered generative AI pipeline to reliably capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every day. As always, this is market intelligence, not financial advice. Let's get into it. Monday, March 30th, 2026, 7 a.m. Eastern, ES futures are trading at 6,436. Absolute negative gamma and a VIX above 31 are signaling severe structural fragility. Last session's scorecard warned of high volatility, but the magnitude overran the board. Our 6,400 put wall was breached, forcing a gap down to 6,369. If dealers are trapped short options without a flip level to anchor them, expect any intraday momentum to turn into a self-reinforcing cascade. The market regime is firmly negative gamma, with net DEX sitting at a heavy negative $15.5 billion. Volatility is the protagonist today. With the VIX resting at an extreme 31.23, we are in a pure volatility expansion environment. There is no GEX flip level today. The market is an absolute negative gamma. Mechanically, this means dealers are net short options. They are forced to buy into rallies and sell into dips to dynamically hedge their exposure. This removes all mean reverting cushion and aggressively amplifies directional price swings. Do not expect ranges to hold. Mapping the critical pivots. The put wall sits at 6,300 while the call wall rests at 6,600. Spot is safely floating 136 points from the put wall and 164 points from the call wall. The expected move is massive at plus or minus 125 points. Critically, ES spot at 6,436 has already broken below S1 at 6,443. Do not treat S1 as support. It is now overhead resistance. The first active downside support target is S2 at 6,409, sitting 27 points below spot. Overnight, the tape was driven by severe geopolitical escalation. Rising hostilities involving Iran and surging oil toward the 100 per barrel mark have reignited stagflationary anxieties. This macro shock has forced risk-off flows and embedded a persistent tail risk premium into the VIX, translating into a 41 handle gap down in the overnight session. Turning to the risk radar, the primary catalyst drops at 10:30 a.m. Eastern with Fed Chair Powell speaking, overlapping with the Dallas Fed Manufacturing Index. Fed Williams follows at 4 p.m. Eastern with inflation expectations under stress from the energy shock. Powell's tone is asymmetric. A hawkish lean risks accelerating the gap down into technical support levels, forcing dealers to aggressively sell the tape. Any dovish relief could trigger violent, albeit temporary short covering. Strategically, this regime demands convexity. The day-type forecast points to a downward trend with 75% confidence. Income strategies like iron condors or short strangles face lethal whipsaw risk and should be avoided. The primary playbook targets a breakdown continuation. With spot below S1, watch for a drive toward S2 target of 6,409. If downside momentum accelerates, put debit spreads are favored. The alternative plan accelerates only if bulls could reclaim the S1 at 6,443 with conviction, which could spark a short squeeze towards the R1 at 6,542. Volatility is expanding and dealer hedging is amplifying every directional break. Watch the 6,443 resistance line. The regime wants to move. Position for the break or stay small. Level set, bias defined. Good luck out there. If you want to see more of the Gamma Brief in your daily rotation, hit that subscribe button and don't forget to like. Standard disclaimer applies. This is market intelligence, not financial advice. Derivatives are high risk. Always trade your own plan.